Yesterday was the biggest move, biggest drop in the NASDAQ and the stock market since 2022. Welcome to the subscribers edition of Jay's Corner. No question about it, quite stunning. Over the last week or so, we've seen a 10% basically high to low from the all-time high. Seems in just a flash we've moved down lower. And in the newsletter, what I'm going to take a look at here is a couple of things, and we'll just go to it now. So this is, of course, all the headlines, obviously, right? This is what you would expect that this is CNBC here saying stock market worst day since 2022. Headline names, ones I recognize, Tesla, Google. They reported, they disappointed. And you can see here, tech heavy, NASDAQ down 3.6%. Here it is, and here you go. This is grabbing the headlines. And very understandably so. Everyone knows the names. Okay. This is what I pointed out in the newsletter here, right? And by the way, everyone should read this newsletter, even if to screen through it, just to have an idea, because I'm trying not to, overwhelm. But this graph down here, you can see it here. This is the S&P 500 versus IWM, which is the small caps, and the red line here, and what I'm picturing here, and let's see if I can make this a little bit bigger, is that I'm talking about this distance between these two. You can see here that the S&P 500 and the NASDAQ was even more extreme than that it had outperformed small caps. And so what ends up happening is people understand and know about NASDAQ stocks because they're in the news every day. Underneath here is an allocation, and all of a sudden here, that this difference, this catch up, and this is why I called it playing catch up, is that the big news for me, right? Up and down in aggregate, right? If this is just risk on, risk off, I'm just kind of shrugging, out of stocks into bonds, vice versa. Not a big deal. This is a big deal. And then now I wanted to take a look. Now my attention, you've got my attention, Mr. Market. And I've known this, right? Which I've discussed this in other videos as well as on the newsletter, right? We're back to first principles, of course, and now you can understand. This is why you need to understand theory, at least concepts. No one said you had to work this out on a spreadsheet. In theory, this makes sense, right? And that's why I used and created this idea of Jay's Rib Shack, right? Mr. X explaining Jay's Rib Shack. So Mr. X owns Jay's Rib Shack, right? We don't have the luxury of spare cash. So what do? We have to borrow. We have to borrow for new projects. We may have to borrow to make payroll, okay? And the reality is, McDonald's rolls commercial paper to pay payroll, so don't be surprised. Okay, to that degree, borrowing and lending is important. Now what you can see here is the denominator, always the denominator, right? Shout out to Professor in California, retired Professor Emeritus, underestimated the denominator. Well, now you can see what happened. Are here since we've had some big headlines, right? We've had Fed meetings, we've had inflation numbers, both basically saying that R is capped to the upside. And you may remember I sent out a newsletter, or I sent a video saying, is the coast clear? Right? And rhetorically I wrote it. And the point is that the Fed chairman basically said, are going higher in us raising rates. He almost laughed at the question. It basically caps this. And so now you can see what ended up happening is the most sensitive equity holding would be the interest rate sensitive, which has switched to small caps. This is the underlying theory, right? So we don't have a blow up in employment. We'll talk about that later. Maybe. We'll probably run out of time. That what ends up happening is the cost structure to Jay's Rib Shack has stabilized. I get to keep the lights on. So if I get to keep the lights on, then I can make marginal amounts, even if I'm a small company, that I improve on the margin on a percentage basis the most. That would be the theory here. That would be the underlying theory here. The reason, and so now you can understand that this has been a very, very confusing time. And the reason it's been confusing is because you've got two dynamics. We've got this here because the news is telling you that Tesla and Google have underperformed. And yes, could we have other videos about why Google specifically? Sure. Right. Boils down to you got to plow a lot of money into AI. We don't know what the end product is, the dominant money-making end product is. And while all these guys are shooting rockets at each other, it costs them billions to build these rockets. Right? And they're still not sure when they hit the fire button whether or not they're going to hit the target. That's their arms race, basically. Now I've aged myself. Anyway, so now what we've got here is that this is the headlines. And then on top of that, we've got this. So we've got markets down and convergence occurring. And now it's tough. And then I'm like, I can understand some, right? You can see these differences here. The scope of these differences. It's notable. Compounding, it's not zero. You can see it here. For example, 5 versus 2.3. Yeah, it took, right, from the beginning of the year, it takes 6 months for this to evolve. 4.5 months. This happened in a month. Right, so it's not only direction, but it's speed. And the speed at which this has occurred has said, okay, I can understand. Yeah, this is true. That doesn't make this untrue. This is still true. But so here's the stuff and the reason for the subscribers situation. If you had to give me too many adult drinks, I would tell you that the bomb sits here. And I have mentioned it here before. That financial crises usually have to deal with borrowing and lending. They do not have to deal with, oh yeah, well, Honda is better than Ford, which is better than General Motors, and competition. That is usually not it. Right? It usually has to do with borrowing and lending. And so now you understand the many layers of stocks for show, bonds for dough. Is the bonds for dough is talking about the cost of borrowing and lending. And people are borrowing and lending for projects, which also includes investing. And so you have this concept here, which is this thing called dollar debt, et cetera, and you've got off-balance sheet dollar obligations. This is very complicated, but I'm going to try to explain it to you, right? Let's say I have to borrow 100 yen. 100 yen. Right? So I take my dollars, I borrow yen. Okay? I borrow yen. We're going to get to it. Here we go. The thing of the cost of borrowing yen has basically been zero forever. For our intents and purposes, right? Forever. I realize that this is, okay. For the most part, the cost of borrowing in yen has been zero. So the steps would be, right? Let's say I borrow yen, right? Convert yen to US dollars. Now I've been able to do that at, let's just call it 100. Right? This has existed. Borrow at 100. So this, I borrowed, and I later pay back the yen. What did I do in the meantime? What did I do? I converted back to dollars and invested. I normally, okay, so deep in the weeds at the very highest end of finance is fixed income arbitrage. Right? In other words, what they did is they borrowed at zero. They bought US dollar, they bought, let's just call it euro denominated bonds. So they made 4% there. And then later, converted the euro back. This is bad of me, wasn't it? To yen. And I'm going to change this to dollars because I started with dollar. Right? So let's say I bought some securities and they were US dollar denominated bonds at 4%. And then later I got to convert. But I at the rate that is in effect at that time. And now it is 160. I don't have to pay back all the dollars. I just have to pay back the amount of yen, which is now much cheaper to pay back. So I borrowed a bunch of yen at zero. I paid back that same amount of yen, which was 100, which is now equal to what? It's 62.5 US dollars. So what did I make? I made 4% a year plus 100 minus 62.5. A lot. I've made a lot. That also means the reverse is true. Meaning that what happens if this was 100 and it's not 160? Instead, it's 70. So now in the same way, when I've done this and I converted back and now this is now 70, what has happened is I have made $4 a year, 4% a year. That's true. But I've now had to pay back the yen, and in dollar terms, that is now $142.585. So now, instead of this 62, decimal place in the wrong place. I'm killed. Crushed. Right, so I've made the 4%. That's fine, because why I bought this dollar denominated bond at 4%. But I had to pay back my yen later. So now you can see it. No one said that this was dollar denominated bonds. This has been going on. This has been going on for decades. This is the yen carry trade. If you go into Google and you type this in, this is what it is. Now, retail, right? Joe Broker, can you do this from your living room? You cannot. Of course not, right? You don't know how to borrow. They're not going to lend you this amount. You've got to put up huge amounts of collateral, et cetera, et cetera. And because now what ends up happening, I borrowed 100. Yeah, but I borrowed using collateral. So I didn't borrow 100. I borrowed 500, 300. This is the structure by which people get insanely wealthy. This is the issue. What you have not seen yet in the press is this. I'm concerned when the euro moves 1%. Right? Concerned. 2% out of the question. This is from 162 to 152 in a week, which just happened to coincide with what? This. I'm not saying, I'm just saying that I've been looking for, okay, yeah, this is true. These are true. Absolutely. They're not the full explanation. They can't be. Not with this speed. What could upset the speed? This can upset this. Upset it. This absolutely can. Why is that? Because they've not borrowed 100. They've borrowed 300. Right? They put up $100. They borrowed 300. This is this crushed on all a 300. They had 100 of collateral. It's kind of like when you borrow for your mortgage, right? You put up, let's call it 30% to buy something worth 100. Now the house starts to crash in value, and now you've got the housing crisis, right? You can't pay your mortgage, and in addition to that, the value of the house drops. And now you owe more than the house is worth. You rationally walk away from the house. You foreclose. In the same way, that's what's happening. That this is what can happen here, and we have this dramatic move down here. One which we have not seen. If you go and look on the international news, you'll see Bank of Japan jawboning the yen, stop pushing the yen around, stop speculating around, and you can see pretty violent here. You can see here that how long this has been going on. So you can see what has happened over 5 years. What has happened? When I said decades, right? You were able to borrow at 77 and pay back at 152. Not really, but you can understand what my point is. In short periods, this has been the trade that people have used to borrow, right? Borrow yen, convert to dollars, buy Apple, pay back your loan in yen, which is now, oh yeah, I don't have to pay 100. I have to pay 50 cents. Because why? Because my dollar has doubled. I have to pay back in yen, not in dollar. This is the yen carry trade. And I have tried to explain this in videos. I'm explaining it here. There's this second, my bottom line for you is there's this second dynamic here that I highly suspect is going on. Almost impossible for this to be in the news yet. Right? Someone big will have to blow up in order for this to make the news. That said, the concept is here. Who also has this? Oh, every huge international bank. Is there something for you to do now? No, I didn't say that, right? It is important, however, to be aware that this kind of dynamic here has nothing to do, right? Yes, is this wrong? Yes, is this wrong? No. There's nothing wrong with the idea that, okay, Google disappointed, Meta's up next, Amazon, et cetera, as this AI nuclear war, rages. Yes, true. But much bigger, much faster. So while we have debates about the numerator, actually, once again, things like this tell you that the denominator, right? Foreign exchange, borrowing, right? Those are conjoined twins. And the reason they're conjoined is this mechanism here. Questions, you can send me an email. Thanks, everybody.